You would think I learn, but I make the same mistake every other week. I forget to turn on my audio, and it's just ridiculous. And I'm talking and talking like an idiot, and now somebody tells me audio. Thanks, Justin. Tesla is down only 0.1%, 0.1%. How did Uber do today? I want to add something to my checklist, something I think is really important. I'm going to add where it's trading historically. Like, is it at like a 1-year high, a 1-year low? Is it a 5-year low? 195.8 billion. I'm sure there's websites that give you that information, but can't really think of many. The best way to create a due diligence model is to do it yourself. If you rely on a website, they're never going to have all the things you're looking for. And you don't really learn anything when you just follow what a website has. Like if you just read exactly what they have, you'll learn a little bit, but you're going to really learn if you start inputting it yourself and updating yourself. This is what I was talking about yesterday, how in the most recent quarter, Tesla sold 380,000 cars. Toyota 2.8 million. The Toyota 700% more cars. Yet Tesla's, I think, triple the market cap. I don't know, like nothing can bring Tesla down. Like no matter what happens, this is their quarterly deliveries, which arguably is the most important thing for a vehicle manufacturer. If you're looking at Google, Meta, those types of companies, it's subscribers. Or Google doesn't really have subscribers, but they have visitors to the website. Meta has how many people use Meta, like daily active users, monthly active users, and that's like 3.5 billion. Netflix, it's members, people who will pay membership, because you can't really use Netflix unless you pay. So for those companies, those are important metrics. But for a vehicle manufacturer, it's how many cars were delivered. That's by far the most important metric, because there's no users. If you use a Tesla, you own it. Do you have volumes for the said time periods? What does that mean? Do you have volumes for the said time periods? Are you talking about volume in terms of the stream, like the volume you can hear me, or are you talking about volume in terms of stock? I'm not really sure what you mean. Let's do something different. And let me know if there's a stock you want I could do a DCF on. What a great day today. I feel so much wealthier today than I did yesterday. Even though I didn't sell any stock, but when your portfolio goes up, it's a good feeling. So Apple 212. So they're trading at we're in a 13-month low. So let's track it like this. This is good information. Because I mean, Nvidia, we should have just bought Nvidia. Why are we fooling ourselves? But you want to find a stock that's trading at a low point, because when a stock gets low, it's a good value. Amazon. So in December, So a 6-month low. Bitcoin, it's trading ATH, all-time high. I don't have to even look at it. Are you buying healthcare stocks? I'm always pretty bullish healthcare. I think that's a great industry. So am I buying healthcare? Well, currently I'm not, but that's a good sector to look into. Maybe we should do some due diligence. July, so February to July, so 5-month low. So Berkshire is a 5-month low. So 5 months ago, you could have bought it at the same price as it's trading at today. CVS is probably trading at a multi-year low, high. Target's the one that's struggling. Huh. June 2025. So CVS is up a lot. June 2025. So 11-year low. So you could have bought CVS 11 years ago for the same price, and it's up 35% for the year. Why is CVS up so much this year? The main reason is because the stock was beaten down so much the past few years. I mean, look at it. It was 109 in the beginning of 2022. And then it fell to 44. So it fell 60%, which is a lot. I mean, this is not a small company, 85 billion market cap. So you'd have to go back to 2014. So if you bought it in 2014 and then you held it till today, you're flat. You do receive dividends, but the stock price is flat. It's nothing. That's really depressing. Because when I hold stock that doesn't move, I feel like I'm just wasting my money. I feel like I should put my money to better use. Do you guys feel the same way? Google. I bought, yeah, Regeneron. That seems to be doing really well. June 2025. So 13-month low. Google's trading at a 13-month low. So this is how you make money as a day trader. You try to buy stocks at a discount. If you're a long-term trader, then you don't really worry about price movements so much. You should always worry about price movements, but it's not like the number one thing. If you hold for a decade or 20 years, who cares if if you're off a few percent? In the long term, if you're up like 3, 4, 500%. So Robinhood's back to an all-time high. So you might want to wait on this one. Ideally, you don't want to buy stock at an all-time high because it's that game I always talk about on The Price is Right. Like the host flips over a card and the person says higher or lower. And if it's a 3 of hearts, then almost everyone's going to say higher because you would lose with a 2 and you tie with a 3. So you're going to go higher. So when you go 6 of diamonds, you would still say higher because there's more cards higher than a 6 and lower than a 6. So if you're buying a stock at all-time high is like turning over like a 3 or 4. Why would you go lower? Of course, it's possible it goes down, but it looks there's so much more, many more cards. So I guess in the opposite, this is like um, the jack, if you want to use my analogy. So do you think it's going to go higher? Yeah, sure. A queen, king, or ace can come out, but it's much more likely you're going to see a 10, 9, 8, 7, 6, a lot more cards. Lyft. The only reason I put Lyft on the list is because Uber was on the list. So I just want to have something to compare it to. Wow. Lyft. It's trading at a 3-year low. You'd have to go back to 2022. Meta's doing really well. I feel blessed to have to buy Meta. I feel like I'm so lucky. Like I'm in a small group, you know, when you're a part of a small group of people who's allowed to be part of a team. You were selected, even though anybody could have bought the stock. But I feel like I'm part of a small group. But in a way, I am, because anybody could buy it today, but not everybody bought it when it was $100 a share. And if you did buy like Nvidia at $20, you're a part of a small selective group of people. And nobody can take that away from you. Microsoft trading at all-time high. Netflix, I know they're trading at all-time high. So why don't I sell stocks like this? Hi, Scott. Have you ever looked at Cake? Oh yeah, sure. Uh, Cake. Wait, that Dave and Buster's? Let me look at that in a little bit. This chart's getting so big, it's hard to keep track. Well, it's not hard to keep track. It's just a lot of information I need to. June 2025. Four-year low target. This should be interesting. Look how low it is. It's a 6-year low. That's like CVS. CVS stock was beaten down so much, it's up 30% this year. That's going to be target soon. Spiders trading all-time high. Who knows someone that always says they're not buying stock because the market is too overvalued. We're bound to see a crash. There are so many people like that, and I just roll my eyes. I'll show you in a minute why. June 2025, it was 329. So you'd have to go back 4-year low. Tesla. Tesla's a 4-year low. That's scary, right? Do you own Tesla? Cheesecake Factory. Yes, Cheesecake Factory. I did know that. Another ATH. Uber is at all-time high. Walmart. If you want to buy the stock of a company that has the most revenue, you'd have to buy Walmart. Yeah, let's do DCF on Cheesecake Factory. Okay, 3.3 billion, $66 a share. And also, once again, when I input into the DCF, I'm learning. And also, you can identify mistakes, like if a website makes a mistake. But you learn a lot more building this stuff rather than just going to a website and just typing in the ticker. Like there could be a website that gives you a DCF. You just type in the ticker, and maybe they'll ask you to change other variables. You don't learn anything that way. You'll learn a lot more by doing it. You can always email me if you want a copy of my. Let me put down the bottom of the screen. Put my email. Always email. I could send you these files, and it'll help you learn faster. I'll put in the banner. Oh, I already have it as a banner. On the bottom of the screen. Yeah, email me anytime. I could send you DCF. I could send you some of the Excel files. It's all free. You don't have to be a member. I'm not looking if you donate, I totally appreciate it, but you don't have to. Okay. So they're saying 130 million of free cash flow by 2027. It actually will come down from 2026. Let me get some water. I'm parched. Be right back. Okay, so let's look at cake. I just got an email. It says you're live now. Go view your channel. How about that? Okay. Um, so what's their free cash flow? It's 130 million. Pretty low free cash flow. Let's yeah, I'm about $59. It's yeah, brick and mortar is a tough business. A lot of companies are having trouble. Costco figured it out because Costco, as you probably know, makes money on its membership. They don't really make much money selling food and groceries and stuff like that. Most stores, supermarkets don't make much money. It's all about mass. That's why That's why Walmart is so much smaller than Amazon, because Walmart has a tiny margins. If you're a supermarket and you do 1 million of revenue, your profit, literally, it's like 1% margin. So that could be your monthly revenue, $1 million, and you only have $10,000 of profit. But if you're a restaurant, much higher margins, because restaurants mark up things, right? You can buy a steak at a supermarket for $20. Same exact steak in the restaurant is $50, $60. So a supermarket may have like 15% margin. So on $1 million of revenue, 150K. And then a company that sells ad space like Google and YouTube has like 50% margin. So that $1 million they convert into 500,000 of profit. And one of the most profitable businesses is when you have to use creativity. So a jewelry maker, somebody who designs jewelry, some of them have like 90% margin. It's all profit. They take gold and beads and things like that, and for $1,000 a product, they take it and sell it for $20,000, because the value is their creation, the artistic work they're doing. That's the value. So in order to make money at a supermarket, you need an enormous amount of revenue. And you do get it, because supermarkets have a lot of revenue because people always buy food. That's one thing people have to buy. And whether we're in a booming economy or struggling economy, people always go to the supermarket. So you really need like 10 million of revenue just to kind of get close to a restaurant that has 1 million of revenue. Okay, yeah. So let's see what let's get more info on cake. They have great cheesecake, right? So Simply Wall Street's saying they're worth $30. So they're saying they're 116% overvalued. And if you have Simply Wall Street, I suggest you look into the numbers, because you learn a lot this way. So you just hit the data button down here. You could hit learn, and this gives you just some information words. But I like to look at the data. I like to look at the discount rate. They're using 9.6%. So let's do the same discount rate they're using. We're pretty close. We're 9%. This just explains how they came up with the 9.6%. What they take the levered and unlevered beta. They use a 2.9% perpetual growth. I'm 2.8% terminal value. I could go to 2.9%. The higher these numbers, and this is a good way to learn, because sometimes people, if I say to somebody, if the terminal value percentage goes up, will the valuation go up or down? Sometimes it's hard to like think about that stuff. But if you actually have the model in front of you, that's why just email me. I'll send you the model. You see, it says our calculated price is 54. What if terminal value is 4? Now it's 64. So the higher the terminal value, the higher the valuation, and lower terminal value, the lower valuation. You could do a 0 terminal value. That's just saying that after year 3, there'll be no growth, which happens. Some companies don't grow. Some companies actually detract, like Lumen. And then you could see their free cash flow estimates for the future. They usually take analyst estimates and then they project future estimates based off of those analysts project, and they always go at 10 years. So you see in year 10, 118 million. So they're expecting almost no growth. So it's exactly the same model I did. But that's why when you're investing, you have to do your own due diligence, and you could look into this and you could say, I don't think that makes sense. I think the company is going to be growing in the future. But it's just another it's conservative to use this type of approach. And I like to be conservative because if I'm conservative and it's undervalued, I feel pretty good about the model. But if I'm conservative and it's still overvalued, then I may be a little not too comfortable and I might not buy the stock. But it's almost impossible to predict more than 3-4 years in the future. If you could think of like how companies are today, and if you went back 10 years, do you think you could have predicted what's today? You'd be so off. Who would have thought? And inflation is a big reason. Who would have thought valuations would have went up so much? And they're not going up because of inflated numbers, like in the dot-com crash and some other types of recessions, the subprime crash. But most crashes warrant inflated numbers. I think the dot-com is the only one I can think of that numbers were just totally inflated. Companies weren't making any money, but yet people were buying the stock in droves. If you just put .com at the end of your name, you can do tractors.com. Anything. We sell tractors. That company would have had a 50 billion market cap without even selling a tractor. That's all you had to do. We just put .com after your title. Yahoo.com. Google.com. But the Great Recession wasn't about overvaluation. It was just the subprime mortgage market crashed, and that had a trickle down effect and everything. Let's see what else. Let me get more water. Can you hear me or not? Okay. Chaggy Holdings. What is Chaggy Holdings? These are peers, competitors of Cheesecake Factory, Wendy's, Arcos, Papa John's. Chaggy Holdings. They probably own a bunch of franchises. They sell special they sell freshly made tea drinks. They found in 2017 in China. Okay, that's not what I expected. It owns, operates, and franchises tea houses under the Chegi brand name in China. Okay, so they sell teas, which is pretty popular outside the U.S. Tea is more popular. Like coffee, by far, people spend more money on coffee because who spends $10 on a tea drink? It's very rare. But you go to Starbucks and spend $7, $8, $9 every day. You don't even bat an eye. Let's see what the analysts are saying. Analysts are also saying it's overvalued, $57 a share. That's by 17 analysts. Nope, no on anything China. Sorry. Yeah, I agree. Avoid China. Usually great valuations, but they always seem to go down. And when you invest in a Chinese stock, you're not investing in a company and their fundamentals drive the stock price. In America, that's how it is. In Canada, that's how it is. The stock price is predicated on its fundamentals. If a company is very profitable and generate a lot of revenue, the stock goes up and people buy it. And if the company's struggling financially, the stock goes down. But in China, it's not about their fundamentals. It's about the Chinese government, because you can have a stock that's doing amazing growth, and it just doesn't go up or even goes down. That's what they call CRP. Do you know what I'm going to say when I say CRP? You guys following? With China and Brazil, buy China, you give your money to Xi, he owns everything. Okay, I'll tell you the first word on CRP. It's an acronym I just made up right now. Country is the first word. What's the next word in CRP? Is it rate? Like interest rates? I'll be really impressed if somebody gets it. I'll even give you the third word. Premium. What is the second word? This is in terms of China. Or really any country, you have to build this into your model, the CRP. So if you're doing a DCF on a US company, they don't have any CRP. But if you do it on a German company, there's a little CRP. And there's a lot of CRP for a Chinese company. What's the R stand for? Somebody's got to get it. Justin, thank you. It's a country risk premium. And there's different ways to build the risk in. You can actually have, if you want to get real kind of nuanced about your model, you can have a chart, like a VLOOKUP chart, and with each country. And I think Professor Damodaran, is that his name in NYU? He gets really detailed in his DCF. But yeah, so what I just use the whack. If it's a Chinese stock, we'll give them a higher whack. But anyways, I like to look at past numbers because it's kind of like looking at past stock price. If a company, like this, these look like really good numbers. This is like perfect. It just goes up. It went down because COVID, and this company is definitely affected by COVID. I remember my wife and I in 2020, we got Cheesecake Factory, but we ordered it. So we went to the store and picked it up. It was like $60. I don't know, like even though it's the same food, I get if I was to go to the store, it was same food, but it's entertain when you go out to dinner, it's kind of like entertainment. You're getting out of the house, so you're paying for that. Just seemed like a waste when I brought it home, the food. Okay, so what were we doing? Okay, let's finish our review. So this looks really good. Revenue is growing, and it could be they're opening more stores, or it could be same store sales are going up, or could be a combination of both. That looks good, growing revenue. And if you want to just also look at earnings, this is what I kind of expected. Well, revenue was going up, but earnings, they went up a little bit from 2015 to 2018. Then, of course, they're going to drop in COVID because revenue's down and they just can't, they're not even covering their fixed costs. But it came back. It came back. And now their profit is higher than ever. So it looks pretty good. They do have a lot of debt. And they're adding a lot of debt. So even in 2020, they didn't have that much debt. They must have added some from COVID, but they're just putting on more debt. But if you look at the debt and you look at what they got for it, like if you see like 2024, I'll make this bigger. This is just a simple way to look at it. But if you see a company with $1 million of revenue in 2024 and 1.1 million of revenue in 2025, so that gives the indication that they probably didn't do an acquisition. It was probably organic growth, depending on the company, but because revenue went up 10%, so it just looks like they're just moving with inflation. And if debt went from 200K to 500K, that's a little concerning. Like debt more than doubled and revenue went up 10%. So this indicates no acquisition. So they just took on a lot of debt just to pay their bills. And you got to do what you got to do when you're a company. But in terms of the future, it doesn't look so great. If that's the situation. But I'm going to show you, because debt isn't a bad thing. It's not like, oh my God, this company has debt, don't buy it or sell the stock. But if you looked at this is a pretty small company, $1 million revenue. But I just want to give you the example. So if you see this, in 2024, they have $1 million of revenue. In 2025, they have 1.4 million revenue. 40% increase in revenue is probably not organic. Of course, it's possible, but it's probably an acquisition. And then if you looked at their debt, and it went from 200,000 to 500,000, it's kind of obvious they acquired a company, and they used debt to acquire that company. So in this case, I would feel good about that debt, because when you acquire a company, you generally have to do it with debt, right? You could do it with equity, diluted shareholders, but it doesn't give you comfort for the future. if in this situation, it doesn't give you that much comfort if they're taking on all this debt just to cover their expenses, because you can't do that forever. During COVID, you had to do it because you weren't bringing in much revenue, so everybody had to take on debt. You have to do what you got to do. But in this case, they added a bunch of debt, but they acquired a company to do it. So that's why revenue went up 400,000. But this gives me hope for the future. That's why you do acquisitions and mergers, because it adds to the top line and bottom line. And ideally, when companies combine, the combined company will be more successful. At least that's the goal. A lot of acquisitions are failures, but the goal, and I would say more acquisitions than not, are successful. So just to give you an example, this is kind of like what you would want. Company A, company B, A plus B. So if company A had $1 million of revenue in 2024, right? Company B, separate company, also had $1 million of revenue in 2024. Well, if the combined company had $2 million of revenue, then I'd be indifferent. I mean, it wasn't like, oh, this was a terrible acquisition, and it wasn't like great acquisition, because they just did what they were doing before. But if the combined company had 1.8 million of revenue, that's not good. Then combining these two companies actually was a waste. They should have kept them separate, because they were better off separate. When you merged them, maybe there was conflict. Maybe some people didn't get along, or maybe some people got fired who shouldn't have got fired because they needed only one of a certain position, and it took a long time for the cultures to kind of flow together. But the ideal situation, which I think happens more than not, is the combined company has 2.2 million. So instead of having 2 million of revenue, and you could think of company A you know, 85 West 2nd Street. So company A is in this building, 85 West 2nd Street, right? I think this is a good visual. I think it'll kind of drive the point home with this visual. So company A. And then next door is company B. And this is at 87 West 2nd Street. And when they combine companies, I'll give you the most simple way. They combine companies, but instead of having two separate buildings, they combine them. They take everyone from company B and put them into 85 West 2nd Street. So what happens? Well, you save a lot in rent, right? What if company A was paying, $100K a year for rent, company B was also paying $100K a year. So now you have a combined company and you just save $100,000 right off the top, just in rent. Not to mention when you combine companies, there's certain positions you can only have one of, like a CEO. There's a CEO in each company, and say both CEOs get paid $300,000. You only need one CEO, and the other one's probably going to just get fired or leave on his own, because most of the time a CEO won't take a lower position. And so in order for both CEOs to stay at the company, one of them has to take a lower position. So one of them remains CEO and the other becomes CFO or vice president or something. But there's other economies of scale when you combine companies, not just this simple visual where you save in rent, which you could do, but you there's a lot of overlap, and then maybe just you're able to make more faster, or both companies have a certain skill, and then combining them makes them even better. Okay, Lilo. Blue X, yes, it's for North Italia and Flower Child expansions. I am buying Grab. That's a good company. No, they bought Fax for 50 million. Have you researched ASTS? Okay, well, let's look. So how do you guys like these explanations? Are they kind of boring? I think it makes sense, and I think it helps people to understand things from more of a macro level instead of a micro level. Like just a higher level understanding on how things work. But anyways, so it seems like the Cheesecake Factory, like one thing I would look at, I would look at a lot of things, but one thing jumps out at me is I want to know why they've been adding so much debt. It must be for an acquisition. It went from 450 million to 627 million. So they must have Cheesecake acquisition. And like I said, if there's an acquisition, that gives me hope that we're going to see a growth in revenue. The Cheesecake Factory has made several notable acquisitions to expand its business offerings. The most significant was Fox Restaurant Concepts, FRC, in 2019, which included North Italia and Flower Child. So that's 6 years ago. I was thinking, why did they add all this debt recently? Just in the first quarter of 2025, their debt went up almost 50%. Was it from this acquisition? Are they still paying for it? What's this? Activist investor pushes Cheesecake Factory to spin off smaller brands. JCP Investment Management believes North Italia, Flower Child, and Culinary Dropout would grow faster as a separate company. This is exactly what we're talking about. Sometimes the opposite is true. If you combine companies, they're less efficient because too many cooks in the kitchen, kind of thing. When you spin off a company, you can focus on one product or one item instead of like spreading yourself so thin. Boring, but needed information. Okay, it is boring. That's good to know. So, Cheesecake Factory would spin off 3 of its smaller brands into a separate publicly traded company. The 3 concepts are part of. So it looks like they're doing that right now, looking into that spinoff. North Italia now has 39 locations, which is 18 more than when Cheesecake acquired them. So they more than doubled, or about doubled. Last year, the company said it planned to open new North Italia locations at a rate of 20% per year. I've never heard of this. Is this a US thing or North Italia? Okay. Oh, there is some in California. So these are the type of things that would make you excited as an investor. Because when you see debt going up and you see net income not really growing much, you want to make sure they have a plan. And it looks like they're working on expanding these other brands, which could really make the stock jump a ton. I'm not sure. Okay, Cheesecake Factory has 217 restaurants, only one more than last year. Okay. So lots of things on the horizon. So if 2 years from now, say Cheesecake Factory triples in price, right? We would be looking at maybe these articles saying, oh, the writing was on the wall. They were focusing on expansion with these other brands, growing them rapidly, and they did that. And now they're really profitable. But we don't know the future. But if they are really profitable, it's a good investment. That's what we have to figure it out. And it's a tough game. That's why I try to stick to companies that can scale a lot easier. Like that's why I like Meta so much. Lots of tech companies. It's just a little easier to scale, less risk involved. Now I have Costco. I bought a lot of Costco. I should add it to this list. But like I said, Costco doesn't really make money selling food. They make money selling memberships. And the great thing about memberships, it's all margin, it's all profit. Because you don't have to like those membership cards you receive. It doesn't cost them like $20 each card. Those cards are really expensive. Cards are like probably 2 cents each. So it doesn't cost them anything really to sell memberships. That's why it's such a good business model. Without the memberships, they would just be like an Albertsons or any other supermarket chain. Well, let's add Costco to this list. I gotta, and we'll look at some of the stuff you. So 987.02. I love Costco. I'm just so annoyed I didn't buy more. That's just how it is. We're never happy. Because for years, when I started my channel, I remember people saying, "What are your 2 favorite stocks?" And it was always the same thing. Well, there was no Meta back then, but I would say Facebook and Costco. And I wish I just listened to myself more instead of I should have just put it all into those companies. Well, it's easy to say now. That's why Buffett is like says things like diversification is for idiots. If you're really sold on something, you don't need to diversify it because you're diversifying away all the profits. Because if you have a company, you put 1 million into a stock, which is all your money, people will be like, "Oh, that's too risky. What if the stock goes down?" So, so they take $100,000, put it into this stock, $100,000 put in this stock, and they only have 100,000 in their main stock. The main stock goes up 300%. Some of the other stocks go down. So it's like you diversified away all your gains. So Costco's up 7% for the year. Let's see. Let's update chart. I'm pretty sure it's trading at its all-time high. It's hard. Let's look it on this website. Do you guys own Costco? It's such a great business model. Okay, it's like a 6-month low. So you can go back 6 months, and that's where it was trading out today. But before that, it was always lower. So if you bought the stock anytime before February 2025, that's a long time. From 1993 to 2025, those 32 years, if you bought it at any point in those 32 years, you're up. You wouldn't be up if you bought it within the past few months. So it's at a 6-month low. It was so obvious, right? But why didn't we all put our money into it? Why do we have to put money into all these other stocks and just burn? Okay, I'll be right back. Let me just use the bathroom, and then we'll do another DCF. Recommend a ticker. Okay, Neil, what's up? Saving, saving, and not working. TDW, GitLab. I am down 25 grand in 5 years investing. Neil, what's going on? What are you investing in? When I hear that, I just say put it into S&P 500. Don't pick stocks. It's not working, or you're selling at the wrong time. Just put it into an index and don't sell out of it. The problem is people sell out of it because it might be up or down. So they go, okay, it's up 20%. I don't want to lose money, so I'm going to sell out of it. Or it's down 20%. Oh, I'm going to lose all my money. $172. Constellation Brands. Great stock. It's one of the best ones out there. Don't they pay a nice dividend? Wow. An amazing dividend. Holy cow. Oh my God. Look at this. 2.3%. What an amazing dividend. What's their future free cash flow estimates are? It's really simple to do a DCF. It's very simple. I'm not saying it'll turn out this way, but you can figure it out pretty easily. They go up to 3 billion. Let's keep it a little more modest. Okay, I'm doing a really conservative model because I like to be more conservative than not. Even in a conservative model, I'm at 211 a share. It seems discounted in almost every scenario. I'd like to look at what others say about it because I don't want their stock prediction to influence mine. They're at 400. That's surprising. And then the analyst forecasts are 211.49. Oh wow, look at that. I'm a 15 cents off. I'm 211.34. So I didn't even look at it. I didn't look at the analyst. I did my model. And you should definitely tinker with the numbers because you get not only do you try to refine and improve the model, but you learn, or at least you should be learning. Constellation Brands. Let's see a little more info. Website's slow. Something that I think it's good to look at, and it's very easy to look at, is employees. Because a company can say, like, you know how Elon's been saying, next year is going to be the best year ever. Robo-taxis are going to be in every single city. We're going to sell more cars than ever. He can say, tout everything, and you don't have it. You never really know if it's true. I don't think a CEO can't lie. They can't outright lie. They can't say, revenue was 500 million. when it was really 400 million. They just can't do that. It's illegal. But they could do things like, net income is $1 billion. Say regular net income is $1 billion, but they'll say adjusted net income. And people think they're saying net income. People who don't really understand. Adjusted net income is 1.3 billion. So instead of talking about a $1 billion net income, they never even mention it. They just say adjusted net income. We adjust. We strip out stock-based compensation, or we strip out what's it called? Impairments. But just look at the clean numbers. Oh, what I was saying is, so you never really know if a company. I mean, if you were to watch the quarterly videos, when they release earnings and the CEO talks about the company in the future, if you watch it a year or two before they go bankrupt, so you have to wait. If a company goes bankrupt, then you could go back. You don't know what the future is, but if you look at a company that goes bankrupt and you look at listen to those calls, it sounds amazing. It sounds like this company is going to be the biggest ever. It always sounds like that. But employees is something you can't really fake, because you're not going to hire people just to make this number look good. The only time you're going to add employees is when there's a reason to add employees. Either this company is busier, there's more demand, more people want its product, or they're working on growing a division and they need to get employees up and running or to do research and development. So if you see employee count going up, that's a good thing. But if employee count goes down, I'm not saying that's a bad thing. It could be a bad thing. But I've seen companies. Why is it always? Their 2024 revenue was 1 billion, right? And they had $10,000 employees. And then their 2025 revenue was still 10,000, but they cut 3,000 people. So obviously, this doesn't mean much because revenue's flat. But if you look at profit, which I've seen a lot of companies do this, their profit in 2024 it went from 200 million to 300 million. They had the same revenue, but their profit went up 50%, from 200 million to 300 million. And the reason, they cut employees. There was maybe a few parts of the company that weren't making much money or even losing money. And they just totally wiped out that division. And they maybe even added employees to a certain part of the company. The part that's profitable, really profitable. So this happens a lot. It happened with Apple. Apple had the Apple car. And once they scrapped the idea of the Apple car, they just fired a lot of people. And it did save them money because their payroll went down a lot. And also, instead of posting a big loss, because they had to post a loss because they didn't actually sell any cars. So that's what I'm saying. It's nothing's clear cut. You can't ever say employee count went up. The company's doing great. Employee count went down. The company's doing bad. You have to combine it with other things. But generally speaking, you want to see employee count go up. That's how companies scale and grow, is adding employees. Look at it. Look at all this insider activity. Lots of selling. Lots of selling. Okay, so who else? What you guys? What Constellation Brands? Any opinions on that before I move on to the next? It's not Constellation Energy. It's Constellation Brands. So they're a beer, wine, and spirits company. They're the largest beer import company in the U.S. They have They have the third largest market share of all major beer suppliers. They're also big on cannabis, which is not really profitable. It hasn't been successful for pretty much any company. It's still it's really in the U.S. If cannabis is legal on a federal level, then cannabis stocks will, I don't know, they'll go through the roof. They'll be breaking records. But the problem is it's still illegal on a federal level, so people can't. So it's harder to sell. So you could be in California smoking a joint, and the cop says, I'm going to arrest you on a federal level. He's a federal cop. He follows the federal laws. Then his partner says, wait a minute, you can't arrest him because it's legal on a state level. Who wins? Who wins the argument? You ever see that episode on Seinfeld when George is backing up into the spot and somebody is going head first into the parking spot, and they just fight the whole episode because George is like, he drove past the spot a little bit so he can back in, and that guy started going in the spot while George was about to back in. So George is like, I was here first, so therefore I should get the spot. And everybody disagrees. Even like there's two cops. One cop says, yeah, no, he sides with George. He says, you were here first, so it's your spot, and tells the other guy to move his car. And the other cop says, actually, no. What was his name on Mike? Was it Mike? Mike Moffat? And the other cop goes, wait, no. I forgot the reason people are siding with the head first, but the other cop was saying, oh, no, it's his spot because he was already going into the spot. I can't remember the situation, but everybody had a disagreement. So it's like that. You have one person like, it's illegal on a federal level. Then they go, no, it's legal on a state level. What are you talking about? Well, I started with marijuana, cannabis. If that's what I was like, how cannabis is illegal because the U.S. has laws on different branches of the government. There's federal laws, which it's like the Constitution, right? It's a federal law that dictates everything. So, like freedom of speech. But this happened during like in the 1940s, 50s, and 60s with racism. It was you had in the Constitution, it was you can't discriminate based on color. And then you have a state saying you could discriminate based on color. So and then you have even laws on a county level. So you have another layer of laws, and a lot of times they contradict each other. Does that make sense? That's how it started. I was talking about cannabis, but then I moved on to Seinfeld when they were George and that guy were trying to get this parking spot. A lot of tangents. I think some people are following. So what companies do they own, and do they make their own beer? No, I think they import. It says right they're the largest importer. Constellation Brands has 2 breweries in Mexico that produce Corona. So they do make beer. They make Corona in Mexico. And these are the this is where in Mexico. A third brewery in Mexicali, Baja, California, was never finished due to some issues. Instead, they're building a third brewery in Veracruz, Mexico. Fubar, I just want to make sure. Do you understand what I meant by cannabis or anything? Things are legal in one sense, illegal in another sense. So if you live in a state, you have to follow state laws. So even if laws contradict each other, right? You have to follow state laws. So in smoking marijuana, if you live in California and you have a card saying you can buy it, it's legal. You can't really get arrested, even though it's illegal on a federal level. But if it was the opposite, if it was legal on a federal level, illegal on a state level, then you probably would get arrested, because states follow, like the cops. A cop in California is going to follow California laws, even if they contradict the Constitution. That's why it was restaurants were not serving black people. Like, you had only whites only, or if you're black, you have to go through this door. And it's contradictory, because in one sense, the Constitution says you can't be discriminated against, but then in that state, okay, I keep going back to this. I think it's interesting, but so Constellation Brands, good company, good product. Beer is a really it's definitely really profitable, probably more so than selling food. The thing is with cannabis, it doesn't really benefit them, because it's hard to make money selling cannabis. In Canada, you can make money selling cannabis, because in Canada, cannabis is legal on a federal level. So What is? Can you guys give me what is legal on a federal level, and illegal on a state level? What do you think's gonna come up when I write this? What's legal on a federal level? This is like the opposite of cannabis, because cannabis is illegal on a federal level, legal on some states. What's gonna come up first? So it talks about marijuana because it's probably thinking I'm writing the opposite. How can states legalize when the federal government does not? So this is the opposite of what I wrote, but let's just see what it says. Can something be illegal on a federal level but legal in a state, which is cannabis and a lot of things? While state laws only apply to citizens within a particular state, federal law applies to all. Both medical and recreational marijuana laws clash with U.S. federal law as a result. A person can act in compliance with one set of marijuana laws while being in violation of another. Are you high? I'm not. But why do you say that? Like, I think this is just it's logical. Maybe if you don't live in the U.S., it might seem odd because it is confusing. But if you live in another country, it might not make sense when I say it's legal and illegal. Let me know. Is it like that in your country? Like Canada has provinces, right? To laws, Canadian laws contradict. I'm sure it does, but I'm not sure if it's as convoluted as the U.S. The U.S. is really confusing when they have laws on so many different levels. Canadian law aims for consistency. Contradictions can arise. It makes sense they left a loophole to arrest whenever they like. It is a loophole. If a police officer is crooked, like a little shady, he may arrest someone for smoking marijuana because he'd say it's illegal on a federal level, and the person it would get dismissed. The person wouldn't have to stay in jail for like the rest of their life. They would just have to go to court and it would get dismissed. But it's just a lot of time and money that person has to waste because a cop is an asshole and he just wants to make your life worse. But it sounds like, why do I need to know this? But it is good to know, especially if you're investing in a cannabis company. This is stuff you want to understand. Do local laws contradict? So each like county might have its own laws. Yes, local laws can sometimes contradict federal laws. When this happens, federal law takes precedence. So federal law, the Constitution, that is the highest power. If you're complying with the Constitution, you're fine. But like I said earlier, if a cop wants to be an asshole, they could still arrest you, and you just have to spend time, maybe losing money from not working. But I'm not high. If that was the question, I just get off on these tangents, and I think it's interesting. The Constellation Brands seems like a good stock, good business model. I like that they're focused on alcohol. That's a great product because it's legal on a federal level. Although I do know alcohol is illegal. Remember Prohibition? Alcohol was illegal, and they had Prohibition, so people would sneak alcohol. Like there would be these speakeasies where people go to bars, but it wasn't a bar that was advertising. It was just only if you knew about the bar. But I remember reading about this guy on Reddit. He was talking about, oh, I'm gonna see my drug dealer later. I'm buying like a liter of what was he saying? I don't know. I'm just gonna vodka. But he's like, I'm buying a liter of vodka from my drug dealer, and I'm buying some marijuana or whatever other drug he's saying. And somebody was laughing at him. Why would you buy alcohol from a drug dealer? Just go to the store and buy it. But he's like, I can't. It's illegal. Which is crazy to think about, right? Several countries. Afghanistan, Saudi Arabia, Libya, Somalia, Sudan. It's all illegal. And it's hard to wrap your head around that because living in the US, like you don't even think about that. Like it doesn't like alcohol being illegal, but it is in some places. So if you go to another country, you could bring alcohol with you and then sell it for a lot more money. Could get arrested if you do that, of course. I think it's pretty resistant. I think um I think it's a pretty strong product. And the fact that they're on they do like importing and they manufacture and they have pretty large scale, pretty wide audience. So I think it's a pretty safe stock in that respect. That's a nice thing about buying like food products or drink products. It's always needed, whether people make a lot of money or people are struggling. It's always going to be in demand. You just want to find out the company that does it the best. But like I said, alcohol is a great product because it's kind of like an addiction, and it's a legal addiction. So if you're addicted to alcohol, you're an alcoholic. Then a company like this will make a lot of money off you. So what was the other one? Do you guys not like the tangents when I get into a rabbit hole and talk about something or a new topic? Does it get annoying? Hey, what's the theme of this live? I just randomly joined. Okay. So you probably left already, Fubar. We just talk about stocks, the stock market. And then whatever whatever topic that's connected to the stock market. Global Interactive. Look at Bitmine, 131%. Wow. Well, Bitcoin went up. Region Cell. Huh. Sunrun, my favorite. I guess Solar Stocks did really well. Look at Datadog, 15%. That's a pretty big market cap, 54 billion. Symbotic. I've seen that one. I think I might have done a video on Symbotic. Solar Stocks did real well, so you want to figure out why. It's definitely because of Trump's new bill that he passed. What's it called? The Big Beautiful Bill? Is that Big Beautiful Bill? And Elon was bashing this. They passed it today. That's why the stock market went up a lot. By the way, hello from Philippines, American living over here. How's it going? Hello, new sub. Currently investing into high yield ETFs and using margin. Margin. I don't use margin personally. I like to just if I have the money, I'll invest it. If I don't have the money, I don't invest it. But I understand some people want to get involved and might only have a few $1,000s. So in order to kind of build your portfolio, you might use margin. So as long as you're careful with it, I mean, it's just a personal choice. But everybody's entitled to their own choices. I would say if you're using margin and you're doing things like options or investing in risky stuff, probably not the best idea. The Big Beautiful Bill, officially called the One Big Beautiful Bill Act, includes significant tax cuts aiming to make 2017 Tax Cuts and Jobs Act permanent and introduce new tax breaks. So Trump what really pushed in his first presidency to give back to the middle and lower class. So a lot of people were getting checks because of these new like the Jobs Act. Um, Actually, let me show you. There's a lot in this file. I don't know if I can find it, but I was trying to put just studying on the tax laws, trying to just understand it better. I think the best way to understand something is to study for a test, even if you don't take the test. It gives you like structure and it gives you goals. Because if you just say, I want to learn something and you try to study it, a lot of times you kind of you fizzle out. Like you stop, you like it gets confusing, or you feel like you're just spinning your wheels. But when you study for a test, you have like kind of like that landmark, that goal is to complete the material and to keep quizzing yourself. Yeah, I don't know how I set this up. What is it? TCJ? So an example is EITC, Earned Income Tax Credit. So if your income is 22,000 or lower and you're married filing jointly, and you have no kids, then you get a specific tax deduction. You also have to have investment income under a certain amount, under $10,000. So investment income is like dividends and interest, or if you sell a stock at a profit. So if you're making more than $10,000 in investment income from all those sources, you're not going to get this tax credit. And the credit is, if you're single, like say you're single, you don't have kids, you don't have much investment income, you get a tax credit of $560. So say that's kind of small, 5,000. So your income is $35,000. It's a small. Let's do the bigger ones. Let's say you have 3 kids. You get a $6,900 tax credit. So I'll show you how this works, how your accountant would set this up. So say your tax rate is 23%. So that's how much you pay in taxes. Say your accountant does your 2025 taxes. He says, okay, so if you make $35,000, you have to pay $8,050 in taxes. I mean, you would not have to write a check to the IRS for $850. You were paying it throughout the year. Every paycheck your company takes out taxes automatically. And if by the end of the year your accountant looks at your W-2 slip, right, and you paid $8,200 in taxes, so each paycheck you paid like whatever it was, $150. Then you get a check in the mail from the IRS if you overpaid, right? You paid $8,200 in taxes throughout the year, and you actually owe $8,050. So you got a check for $150. And then you remind your accountant, oh, wait a minute, what about the EITC, Earned Income Tax Credit, that Bill Trump passed through in 2017? And your accountant says, oh, thanks for reminding me. You get a credit of $69.35. That's your tax credit. So what he does is he lowers your income $69.35. What did I do? So that's a credit you get. And you pay 23% in taxes, right? So you should have paid $64.55 in taxes based off of an income of $28,065. But you actually paid $8,200, right? Remember you paid $8,200? So you get a check in the mail for $17.45 instead of $150. And the reason is because that $69.35, you don't get a check for $69.35. you got to check for 69.35 times your tax rate, which is going to be the 1745, well, minus 150. Because with this tax credit, you received an extra, come on, 1,595. I think that's as clear as I can make it, but I think that makes sense, right? So before the tax credit, before this EITC, before Trump passed it through, like if you did your taxes in like 2010, before this tax credit was ever around, you would just get a check for 150 because you paid $8,200 in taxes, and the calculation is 8,050, so you overpaid 150. But now, with this new EITC, you have to have 3 kids. If you have 2 kids or 1 kid, it's different. Or if you're this has income of 22K, so your income has to be below 22K. So actually, I can't do 35. I have to do 22K or lower. But there's a lot of tax credits Trump passed through, and that's why a lot of people are saying, me included, that wow, I got like a $500 check, or I got $1,000 for my taxes, a lot more than last year. Does that make sense? I think it should make sense. Let me know. And there's a lot of these types of tax credits. This is just one example, but there's a lot of different ones. Let me see if I can. There's so much information in these. I mean, I did put it together, but here's the tax rate you have to pay. So if your income is say 150,000 and you're single, your tax rate is 24%. Yeah, but this Excel file is a little boring. A lot of people seem to click off the video when I go through it. Okay, so this explains right here what the TCJA includes. It lowers most individual tax rates. The top rate was 39.6%. So if you made over like 500,000, they lowered it to 37%. They increased the standard deduction. Everybody gets a standard deduction. Most people do not itemize their expenses. They use the standard deductions. A lot of things. There's the child tax credit, which is similar to what I just showed you. But let me know in the comments. I keep losing people because I think this stuff is kind of boring. I appreciate any direction you want to go. Good depth, and I learn. Okay, yeah, thanks for confirming. By the way, hello from Philippines. Are you high? I guess when you talk about accounting, you may seem high. TDW. Fun. TDW. Tidewater. Is that a cannabis stock? Oh, but shipping. Probably really high dividend. No dividend. That's interesting. Yeah, I'm kind of getting tired actually. Let me see. I may fall asleep soon. 2.4 billion. 4811. That's weird. It doesn't pay a dividend. You'd think it would. $500 million. 300 million, 400 million, 500 million. I'm trying to be ultra conservative. High whack. I I kind of trimmed down the future cash flow estimates. I'm still at $100. Look at that free cash flow. Really impressive. Look, 279. Wow. Simply Wall Street's 279. Let's look at the analysts. Analysts are at 55, so they say slightly undervalued. I wake up really early, so it's about my bedtime. I usually start. I lay down in bed 9:30, and by 10:30, I'm sleeping. 750,000 for the CEO, not too much. I'm shocked it doesn't pay a dividend. What is the share price? Well, it's really come down. It's 46. It's trading at a 2-year low. Wow, look at that, 107. Look at that. I am at 100. So it was trading at the right value last year, and it was sold off completely. So it looks like it's still worth $100. What do you guys think? I guess I got to go to bed. I'm really tired. Okay, see you tomorrow. Thanks for joining.